So 2 weeks ago, the market started to rally. However, in the past week or few days, it has taken a little bit of a dip. And I think right now, the market is something like 60% greed, 40% fear. Would you say that's quite accurate? Too busy to find stock ideas? Check out Fiverr Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description.
I would say right now it's gonna be quite the opposite. 60% is gonna
Right
be
now?
red. Yeah.
Okay.
Yeah.
Oh, going to be or right now?
Right now, 60% red. 40%.
Yeah. So, we mentioned in our group chat, our Fiverr Pro group chat, this is May the 12th, right?
Yeah.
This was at the peak.
Yeah.
Yes. That, guys, we shouldn't have FOMO, which is, and the reason why was because at that point in time, greed was very high, right? A lot of people were very greedy. And so far, we've been proven right?
Yeah. And also, interestingly, was that consecutively positive in terms of like market movement, right? Is because there's a lot of like good news. So there's a de-escalation of tariff war, and then there's some sort of like good news about certain industries. I think it's like some tech or oil and gas. It's like everything is like just seemingly like going back to positive or going back to square one. But then I think everybody is like forgotten about we are still in the tariff environment. There is like a 10% reciprocal tariff against every single country. China is still 30%. So, and then also another one which is key, which is the US debt, which is we're going to be talking about it later. But anyhow, back then it was like quite, I would say it's quite interesting to see that market is like rallying back up, almost
so quickly,
like covering the cost. Yeah.
Yeah. I think it was rallying up almost as if people forgot that the people think the tariffs are over.
Yeah.
And so maybe that's Trump's like psychology trick, right? He made you go from being okay with no tariffs to being okay with 10% or 20% tariff. Then they're like, it's a relief to be at 10-20%.
Exactly. And also, this also have to do with his tweet. So whatever he say in the public, obviously the retail investors are paying close attention to whatever he says in the market. So that's why you see when he say like it's time to buy, generally speaking, I don't think institutions are the one buying. So I think it's the one who's buying up is retail investors. So basically they are just following whatever he says. And then you can see the currently foreign fund is actually exiting after they have been buying up the market for the past few weeks. So they are in a way taking profits already.
So this is the US 10-year treasury, and long story short, the yields are going up. Of course, for people holding US treasuries, it's pretty decent, right? You get a higher yield. However, what this implies and why the yield can go up is simply because people are actually selling.
Yes, correct. So I think they are not confident with the US economy. At least for the 30-year. You can see that it is still going up. And the reason why it's going up is because there's more sellers than buyers. So this also could imply that they think this 5% is not really that attractive to them. So they want probably like a higher yield so that they are becoming a buyer. So right now you see like 30-year is like 5%, which is quite crazy.
So two things I'll add. So you can see this the same way you would see an earnings yield, which is a PE, right? So the reason why in this case the yield has gone up is because the prices dropped for the demand, right? Basically, and you can see two ways, right? Is low PE a good thing? Is it a bad thing? You have to make a decision. The second thing is, I think in Japan, their version of the 30-year treasury, the JGBs, are also going up. So Japan is the largest foreign holders of US treasuries. And so when they decide to sell, it does move the market.
Yep. And then we also have this news, which is also not so good, that Trump is going to be threatening a 50% tariff on EU and also a 25% tariff on Apple. But I think for Apple's case, it's fine. Because I read some article, I think it was on Ziet. Basically, he said that the cost to make iPhones in India can still like offset if, let's say, whatever tariff that they need to pay. So it's actually more cheap for them to manufacture elsewhere than in the US to save money. And then they just pay up the 25% tariff. That's fine for them. But for EU, I think this is going to be another trouble. But thankfully, like, on Sunday, it was a Sunday, he basically announced that he delayed a 50% tariff until July, the 9th of July. So there's some sort of like breather in the market. But again, there is still some sort of like ongoing trade war. So don't expect this to stop with just EU. Potentially, it could bring back China's trade war again. So it's like right now it's 30%, right? If like there's some sort of like discussion that didn't really turn out to be well, I think he would be hesitate to like fire another like 30%, maybe plus another 30% or something like that. I mean, this is Trump lah, so anything could have to go like haywire one. It's like very, very uncertain and very volatile.
Yeah, and also he mentioned to the EU that we will consider lowering this 50% tariffs if you put tariffs on China.
Tariffs. Yep, that's also another key thing. Okay, so this is something that we talked in our previous big webinar, which is the how to win in the Trump's 2025 market chaos. And we will share these few statistics. This one is the updated one for today's video. So you can see that the odds of recession after Trump de-escalated the trade war, the chances of getting a recession actually dipped from April to May. So you can see that initially it was quite of a high, like around 80% chance. Now it's back to around 62%. So which means market thinks that, you know what, I think it seems to be fine a little bit. Then you can see that the expectation, initially there's a lot of people, but then it dropped from April 2025 during the de-escalation. Now, if you want to look at the mood, right, it's not really entirely pessimistic. You can see that trade war, we are now rebounding from the bottom already. When everybody's like talking about like sell off the market, but now they are buying back the market. You can see also it's the same for their cash level. So their cash level also dipped a little bit. Initially they were pessimistic last month, but then they are starting to buy a little bit in the market. So this shows you that, you know, there is still some I would say like shopping activity that is going among the fund managers. So that's also another sign to tell you that, you know what, they don't think that the worst is here to come. Okay, so now the other one is the retail investors. So just now we mentioned a little bit about the Trump's tweet, right?
Yes.
So this actually is driving a lot of like retail's buying and selling activity. So you can see that the latest around over here, they are the biggest buyers in the market. And also, I think this also have to do with the culture in the social media. They always share like when the market goes down, it's time to buy the dip. So this is some sort of like a, how to say, it's something like a cult already.
Okay.
They are trying to teach people when market drops 10-20%, it's time to nibble a little bit. It's what I've seen across like most of the financial, whether is it advisor or guru or whether is it YouTuber, they all always say things like, don't time, but then if let's say the market does like, there's a discount, you should like take advantage of it. So that's why you see like recently, retail investors are more actively buying and selling in the market because of this basically market chaos. They think it is an opportunity, so they are buying it. Then whereas for institution, they're actually doing the opposite. Instead of buying, some of them are actually shorting the market. So yeah, retailers are buying, driving up, then institutions are shorting from the top. So this is like a totally different behavior compared to retailers. Or you can say that institutions are kind of like a smart money kind of thing, and then the retailers are not so smart. So
something to look out for.
Yes, correct. Although it's still not so high, but then it's trickling up, it's going up as we speak. Then another one, which is the CPI. A lot of them still think that CPI figure is going to be high for 2025, but then the expectation kind of like dropped a little bit when the tariff war de-escalated. So I mean, it's still quite a high side lah. I think a lot of people think that CPI will be around like 4% at the end of the year. So that's why you can see that why the Fed is still keeping interest rate at high, which is why they foresee the inflation is actually going to be at that level in the future. Then the other one is the US debt. This is also something that we covered in our big webinar. About 29% of the federal's debt is going to be matured.
Refinance, basically.
Yes, refinance in less than a year.
Almost 10 trillion. Yeah.
Yes, correct. So you can see that in terms of the interest payment, as of a percentage of revenue, right, it actually increases a lot. So last time the interest payment was around like 12%-ish, but that figure actually increased up a lot because
because the rate hikes.
Rate hikes, yes, correct. So that now it's like 22%. It's not so good for the government, obviously, and this is also the reason why they are actually trying to do a lot of measures. Like number one, either they want the Fed to buy the bonds at a lower market price, or number two is they may want to do like a Mar-a-Lago Accord, which is to basically term out their foreign holders' US Treasury to become like a 99-year or maybe a perpetual kind of like tenure. So instead of like a 30-year or 10-year, right, they want it to spread up to even longer, which is going to be very, I would say, daunting for foreign holders because, I mean, if they think the US is not a good place to invest in, they may start to pull out their money. So I think this is one of the two measures that Trump or the government can do to actually finance this high interest rate. Then about rate cut, the Fed is still not going to be reducing any rates anytime soon. They say that at least until September, because I think September they will start to see more data so they can gauge whether they should reduce rate or not. But if you're expecting June, July, August to cut rates, no, the answer is no. So they already gave you some sort of a certainty in terms of when rate cuts is going to happen. And also this is have to do with the PCE also that is trickling up at the moment. So that's why they are still being very careful about rate cuts. Just now you mentioned about Japan, 30-year bond. Yeah. So it's now going back up again. It's even higher than the 2000 time period. So you can see that, this is not a good sign because you need to recall that Japan holds a lot of US Treasury in their bank balance. They are the largest holder actually at the moment. So with this yield going up a lot, right, they may start to sell their US Treasury to save their own country.
Well, that's one perspective. The other reason they will buy also is simple logic, right? If I can, in the past, the reason why I buy a lot of US Treasuries is because the differences in the yield, right? As you can see, Japan is like that. I mean, the US trended down also, but it just trended down slower. But now the gap is not so big, right? It's 5 and about 3%. But you can see the market in action, right? Because the more they sell, then the more attractive the yields become for the US, and then suddenly it creates potentially more demand for the US Treasuries.
Yep. So this is also another thing that is happening. The domino effect of the tariff war. And you can see this is basically the summary on what's going to happen, right? So number one, bond yields are rising sharply. What it could affect the stock market is that it's mixed. Some sectors will go up, some sectors will go down. Yen would strengthen, which means more capital may start to return home, which is going back to Japan instead of staying invested in the US. So what this means is that's why you see currently why US bond is going up, right? Is potentially there is some foreign holders are selling off their stuff and then they are buying back probably their own bonds. So yeah, this is also another thing that's happening with Japan. Then we also have Taiwan. So if you notice, Taiwan's currency also appreciated a lot against the US. And mind you that Taiwan, it is an exporting country also. The export accounts about 60% of their GDP. So which means tech companies, for instance, like TSMC's profit might start to be affected because of these currency strengthening issue. It's the same thing like what's happening with Malaysia exporters in the past. You remember the Petronas Chemical, they reported a loss, right? Because of Forex is actually, they did a Forex loss because the ringgit strengthened against the USD. So and it's appreciating at a very, very fast pace. So a lot of these companies didn't really expect it. Yeah, it's something like a shock like that. So whether they will start to panic or not, this also is going to be another question. But it is an after effect of what is happening right now with the tariff war. Now, going back to China seems to be still fine. But the only thing that probably you need to be worried about is their deficit level. So they have a target to hit a 4% fiscal deficit to GDP ratio, which is quite high, which means they are actively printing out money, issuing more money, giving money to the bank. In fact, it is good if you want to stimulate the economy, but it is bad if, let's say, it didn't turn out to what they expected. So for instance, what if the consumers didn't spend as much as they want, right? So this is also another risk that is happening. Then on the right hand side, we have Michael Burry's recent activity.
Everything basically.
Yeah. So he's back to pure bear again. He only buy EL, only Estée Lauder. But then he was once a bull in Chinese stocks, and then now he sold
Chinese
everything.
stocks went up a bit. So
So he sold everything and he bought put options against the Chinese stocks. So
for those who don't know, put options basically he's trying to short.
Yeah, short the market.
In that sense.
Okay, so basically our final thoughts is that the domino effect of tariff basically once the US is suffering, eventually almost every single country will suffer because they are the main big boss so so to speak. And then the second one, it is 5% bond yield is not so attractive. That's why you see there's still a lot of like sell off in terms of their treasury bond. That's why if you see the next few weeks or so, or maybe like a few months, if the yield still continue to go up, it tells you a lot that bond holders are not enticed to buy treasury bonds at the moment. But if let's say you start to see bond yields go down, right, either it is Trump's negotiation with the country that they want them to buy more, or maybe it is the Fed is the one that is buying the bonds. Because if you read one of the article, right, Fed is actually recently they have been silently buying a lot of bonds. Yeah, so this is also another sign that maybe the Fed need to come and step in to do some sort of like quantitative easing soon. But we shall see in the future. The third one is there's still not a peak pessimism. People still think that there's no recession. The odds of recession happening probably is going to be around 40%. Last time was around 60 to 80%. So that came down quite a bit. A lot of people think that markets is going to slow down. So yeah, they don't think it's recession. But usually when people don't think that it's going to happen, right? Somehow it will happen. Like something that will trigger it to happen one. So we shall see whether would there be a potential recession coming soon or not. Now, the last but not least is Bitcoin. I mean, nothing is safe in the world, right? The US dollar is not safe. Basically, almost every single country's currencies are not safe. There's some sort of like a distortion in terms of the global currency. That's why you see a lot of these investors are hopping onto Bitcoin because they think that it is a much safer place to actually park their money, or at least it seems to be more stable in terms of the financial system. And you can see that Bitcoin, it rallied out from $70,000 per coin to now 110. And that's about like I think it's more than 50% gain year to date. Yeah. So what do you think about Bitcoin? Do you, at this current juncture, would you be adding more, or would you be just like chill?
I wouldn't. So I think that generally my read is people are a bit more optimistic than pessimistic. As you mentioned, the pessimism is not peaked yet. People are not predicting recessions. So the logic is very simple. The time to buy was when people were very fearful. I mean, it sounds simple, but now people are not that fearful.
Yeah. So that is basically our thoughts about the overall market and also the coming future.
Yeah. So this is our Fire Pro returns, but what is May is going to be close to 40%, right?
Right now it's about 37-ish, I think.
Okay. So what is Fire Pro? It's a research community. Right? If you want to know, to learn about different stocks, the investability of each stocks, you want to speak to experts, within the industry on how to understand the specific stock or specific industry better. That's what Fire Pro community is. We have written write-ups as well. These take you no more than 15 minutes to read so that you can get up to speed 90% of the way for each stock. And the final 10% is your decision to make whether you want to buy or sell the stocks. And of course, if you don't know what stocks to look at, we have reference portfolio for you to refer to. If you want to get a taste of what's inside, check out our free sample link, which you can find in the comments and description. See you in the next video.